Good day. Our activity for today is to learn Accounting 101 in 5 minutes. So let us first define what is accounting. Accounting, according to American Association of accounting refers to a process of identifying, take note, it's identifying, measuring, and communicating economic and information to permit informed judgment and decision by the user of the financial information. Accounting is systematically recorded business transaction in terms of money. So let's first start identifying. What do we identify? We identify the transaction, whether the transactions is accountable or not accountable. So what are transactions that are accountable? Accountable, those are that are already transferred. There is already a transfer of goods and services over the two party. And what are not accountable? Those that are only contractual agreement. And where do we record that? The identifying is in the journal. And the journal usually consists of a debit and credit. And this debit and credit should always be equal. Okay? Next, after that, we measure. What do we measure? The amount of the transaction. And usually, it depends on where country or the functional value. For example, you purchase book for 100, then the measure would now be $100. Next, what are the debits? Debits, these are the assets and expenses normal balance, and it usually increase under the debit side. What is asset? Asset are the things that the business own. Example, if you are a student, you own your books. So these are your assets. Your cash, your bag, your shoes. And for business, usually these are the cash, the receivable, the inventories, the prepayments, and the property being used by the business. So these are the assets. Whereas expenses are the things you incur or the cost required for something or the money spent on something. Example, you as a student, the tuition fee being paid by your parents are the expenses of your parents for you to learn. So for business, usually these are the cost for services and goods to sell. And what is credit? Credit, these are the liabilities, equity, and revenues normal balance. So what is liabilities? Liabilities are the things you own. Example, if your parents didn't pay for your tuition fee and you afford a government loan, so these are student loans. So these are liabilities. For business, these are usually bank loan, mortgages, and so on and so forth. In money, these are the money. Equity, these are the money invested by the owner, and it also includes its earning and losses. So, for example, you as a student, your investment or your equity would be your learning, and when you forget those, then that will become your losses. When you use that for your work, then you will earn from that. And then revenues, these are income generated from normal business operation, which include discount, deduction for returns of merchandise. And on the top line, these are also the gross income that determine to cost to subtract what are the income of the entity. Now, what is now classifying? Or usually we have in our definition as the summarizing. So usually the summarizing portion is when we post all the transaction we journalize under our ledger. And ledger has two kinds. These are the subsidiary ledger and the general ledger. Next, we summarize. So after that, you would see there is summarize or interpreting the results thereof. So, or communicating. How do we communicate now? In our communication, we usually prepare our financial statements. Okay? So, what are our financial statements? These are balance sheet, statement of financial position, which show the business position from start up to the period it covered. And income statement or statement of financial performance, these are subdivided on a different period and show the performance of the entity, whether earning or not earning. And then we also have the cash flow. Cash flow, this shows the inflow and outflow of cash of the entity. Statement of equities, these are the flow or the fluctuation of the investment of the owner. And notes to financial statement give us the overview on where the business started and all the standard being adapted by the entity. Okay? So our next stop would be the view is the journal to journalize our events.